Hello, hello. We're live now. We are live now. Are we all here? Sorry, I did not start by 8 exactly because of some technical hitches. So, tune in to live. Okay, is everybody in? Are we going in? Welcome, everybody. Welcome, everybody. The broadcast is about to start. Are we all there? Are we all there? Welcome, everybody. Are we all there? The broadcast, everyone is about to start. Join the presentation. Are we all there? We are dealing with mixed group. Are we all there? Group account. Consolidated statement of financial position. Everyone consolidated statement of financial position. Can you hear me? The presentation. Let me test the speaker. We are dealing with mixed working. Can you hear me? Yeah, I think my speaker is working. Okay. We all there? Group account. Consolidated statement. Are we there? Position. Everyone consolidated statement of financial position. Okay, thank you. I can see you guys coming in. Let me test. You are all welcome. We are dealing with mixed working. John, ensure that you copy the attendance from beginning, in the middle, and at the end. Group account. Consolidated statement. Are we there? And everyone pay attention. If there is any question you want to ask, you ask it through the chat box. Okay, thank you. And if you ask the question through the chat box and I'm not able to, I didn't see it, you can make a WhatsApp call or you let John make a WhatsApp call to draw my attention. Copy the attendance. I want us to take our time to ensure that everybody understands what we are doing. It's very, very important. And everyone pay attention to what we're doing. If there is any question you have a question that you are asking, you ask the chat, and I did not answer immediately. If you ask, maybe things that I have not seen it, so someone will draw my attention to it. Make a WhatsApp. I'll go back to it, and then I'll answer it. Like I said, if I didn't see it, my phone is here with me. Take our time. You can make a WhatsApp call, understand, and then what we are doing. You will attract my attention. What we're doing. Okay, welcome. I think we have all gone back to our homes and settled and relaxed. I pray that you have a light wherever you are, even that have not seen connection where you are, so that you are able to understand it. The topic we're treating is a little bit because if we open our mind and take our time, we'll be able to understand. I'll take my time to explain what I have to explain. Like I said, if I explain anything and you don't understand, don't hesitate. Don't hesitate to call me and ask. Like I said, if you ask and I'm not responding, you should draw my attention through the phone. John, sensitize your class again. We're only seeing 23 people joining out of the whole people in your class. Sensitize them. This is a public class, so it's not that I'm restricting it to members. That somebody will say, I don't have you want me to pay. There will be nothing like that. It's not restricted to members. Everybody, all you need is to log on your class, and then you are in. So we want to start. Mixed groups. We're looking at group accounts, consolidated statements of financial operations, mixed groups. A mixed group is one in which a parent has both a direct and an indirect investment in a particular subsidiary. In such situations, both the non-controlling interest and the good groups must be worked out at two stages. So we have looked at the other vertical group where the parent has interest in the subsidiary and the subsidiary has interest in the parent. In such situations, both the non-controlling interest and the okay, still echoing. Let me. Okay, I'll correct it now. Already, I think the parent. Okay, has it stopped echoing? Has it stopped? I think it should stop now. Is it still echoing? It's still echoing. Okay, let me check. Has it stopped? It has not stopped. Wow. Okay. Let me check again. See what the problem is. Okay, I think it should be on this side. Let me check. Yeah. Let me go on this. Okay. Has it stopped now? Okay, check again. Is the echo still on? It has stopped. It hasn't stopped. Okay. Let me see. Hello. Hello. Okay, it should stop now. Has the echo stopped? Has it stopped? Ah, I've done everything I should do. What is causing the problem? Huh? The echo. They say it's echoing. So where is the echo coming from? Did you log into this app? Don't log into this app. Log off from this app. Log in. Which account are you using? Eh? Check again. No. Because where is it? This thing now? Check whether the echo is going on. No, you are not intruding. You are not intruding. You can continue. It's a public class, so you can join. It's a public class, you can join. Where is the phone now? Check phone whether the echo is going on. This is what I used to. Hello. Still echoing. Still. Let me. Okay, it has stopped. But can you hear me? Oh, it's clear. Okay, it's good now. Okay. Thank you very much. So, okay. Okay, so we can go on now. We can continue. Okay, we are talking about mixed groups. And I said a mixed group is one in which a parent has both a direct and an indirect investment in a particular subsidiary. In such situations, both the non-controlling interest and the goodwill must be worked out in two stages. So the last class we had, we learned about the vertical group, where a parent has interest in the subsidiary, and the subsidiary has interest in another subsidiary called sub-subsidiary. So the parents had indirect interest in the sub-subsidiary. We calculated the effective interest. So that one is a simple or a simpler consolidation. Here is a little bit tougher than that one, because in this case, the parent has both indirect and direct interest in the sub-subsidiary. As we go on, I will explain better what this means. Okay, let's look at a group structure like this. This is the typical example of group structure of a mixed group, where you have the parent, the subsidiary, and the sub-subsidiary. So in this case now, the parent invested 80% on the subsidiary. So it owns the subsidiary 80%. And then the subsidiary owns the sub-subsidiary 45%. But the parent now invested directly on the sub-subsidiary, 15% investment on the sub-subsidiary. So in this case now, there is a mixed interest of the parents. The parent has interest from the subsidiary and then has direct interest on the sub-subsidiary. The parent owns the subsidiary, owns 80% of the subsidiary, and the subsidiary owns 45% of the sub-subsidiary. What it means is that whatever the subsidiary owns in the sub-subsidiary, the parents own 45% of it. Sorry, 80% of it. And then the parents went directly to the sub-subsidiary
and invested 15%. So if you put together the investment of the parents, direct investment, and the investment of the subsidiary, you now have 60%. 15 plus 45, 60%. So what it means is that the parent is wielding 60% authority in the sub-subsidiary. That means he is also the owner of the sub-subsidiary, because the parents will direct the subsidiary to vote its 45%, and then the parent will vote its 15%, which is 60%. So automatically, the parent is controlling the sub-subsidiary. You might say that the sub-subsidiary does not have a controlling interest. Sorry, the subsidiary does not have a controlling interest in the sub-subsidiary. But if you add the interest of the parents plus the interest of the subsidiary in the sub-subsidiary, you see that the parent is holding 60% on the subsidiary or of the subsidiary. So a vote of the parent is 60% vote, because since the parent has authority over the sub-subsidiary, has control over the sub-subsidiary, over the subsidiary, the parents will direct the subsidiary to vote this 45% they have, and then the parents will vote 15%. The combined vote of the subsidiary and the parent in the sub-subsidiary is now 60%, which means the parent is in control of the sub-subsidiary. So that is what we need to know. Because of this, the parent has the responsibility to consolidate these two companies, and these two companies becomes a group. Hello, Tega.
Good evening, sir.
Uh-huh.
Tomorrow they are saying we have orientation.
Join the class, please. I'm in class. I'm online class. People should join. Okay, so we want to look at the group structure. P in S, that is parent in S, is 80%. Parent is holding direct shares in the subsidiary worth 80% of the total share of or equity of the subsidiary. And then parent also has a direct holding of 15% on the subsidiary. That's 15% on the subsidiary. So P in SS, that is P in SS, direct holding 15%. Then S, that is subsidiary, in SS, in this place, 45%. So we need to calculate the effective interest of the parents in the sub-subsidiary. So P in sub-subsidiary will be indirect holding plus the direct holding. So it gives us effective interest of 51%, which is 80% multiplied by 45% plus this 50%, 15% gives you this 51%. 80% multiplied by 45% plus this 50 direct holding gives you 51%. I don't know whether we understand what I'm saying. You can pick up your calculator and do 80% times 45%. That should give you 36%. 80% times 45% should give you 36%. You can pick up your calculator to see whether you get it. That is what it is. Any questions so far? Okay, I believe that to this level we understand the explanation. But if we have a problem, we can ask question and we will respond to the question. Okay, so we're saying that this is a mixed group. It is called mixed because the parent has indirect interest and direct interest on the sub-subsidiary. And this is the way the group structure is. P in S, that is parent in subsidiary, direct holding 80%. Parent in sub-subsidiary, direct holding 15%. This is the 80%, this is 15%. And then subsidiary in subsidiary, 45%. Then parent in subsidiary, indirect plus direct, will give you 80 times 45%. That's indirect. Plus the direct, 15%. That will give you 51%. I said use your calculator to multiply 80%. That is 0.8 times 0.45. 0.8 times 0.45 gives you 36%. Plus 0.15 gives you 51%. So that is the 51% effective interest. So that is that. Now let's look at an example. I don't intend this class to be long. When I'm done with the example, we'll go back again and see whether we are confused or whether we understand. Example: statement of financial position of white, blue, red at 31st December 2021. We have white, we have blue, and we have red. Investment in blue, 25,200. Okay, that's a million anyway. Okay, investment in group. Okay. Sorry, I'm coming. Okay. Investment in blue. 25,200. Investment in red for white, 10 million. For blue, 10,600,000. Then PPE, white, 53,800,000. Blue, 53,400,000. And red, 49 million. Current assets, white, 24 million. Blue, 21 million, and red, 15 million. Then we have total assets. For white, 113,000. Blue, 85 million, and red, 64 million. Then issued capital, 1 naira per share. 30 million for white, 20 million for blue, and 60 million for red. All the figures, you can see them with share premium, retained earnings. They will have loans and current liabilities. The loan here, of course, is non-current liabilities given. Details regarding intra-group investments are as follows. This is entities, white in blue, white in red, and blue in red. The number of shares acquired in million, 12 million, 4 million, and 4.8 million. These are the dates that they were acquired: 1119, 1121, 1120. And then accumulated profits at acquisition dates: 10 million for white when white acquired blue. Okay. Can you hear me now? Is it sounding well now? Is it sounding? Okay, somebody says it's not sounding. Okay, can you hear now? Is the sound coming out now? Hello? It's on. Can you hear me now? Is it sounding now? It's not sounding. Oh, somebody say yes. Okay, no, somebody say. Oh. Hello, can you hear now? But all the sounds are okay here now. All the sounds are okay. Is it coming up now? The sound don't come. Eh? Hello? Maybe I should remove the mic now. This thing. It has come. Okay. So you can hear now. Okay, you can hear now. Let me use the two mics at the same time. Okay, so let's go back again. Has it been long since stop talking? Okay, just stay around there, don't go far. Details regarding intra-group investments are as follows. Entities, number of shares acquired, dates shares acquired, accumulated profits at acquisition dates. So we have white in blue. When white acquired blue, they acquired 12 million. And then white in red, white acquired 4 million, and blue acquired 4.8 million. These are the dates that they acquired it. And all share premium accounts arose prior to 1119. What it means that they have not issued any other shares and there is no share premium since that 1119. So those things, the share premium and share stands still at the amount at the date of acquisition to date. Let me remove my picture for now so that you can see the whole this thing very well. Okay. Now you can see there has been no impairment of goodwill on consolidation in respect of any of the acquisitions. NCI is valued at a proportionate share of the fair value of the net assets of the subsidiary. You are required to prepare a consolidated statement of financial position for the white group at 31st 12 2021. I will advise that you write down this question so that you will be able to follow while I am solving it, because you cannot be turning from one page to another page. So if it's possible, take your Bible and write it down. I want to leave it for some time for you to write, or you take a snapshot that can allow you to switch from one page to another page, because it's important that you see the question as I am solving it. It will be better for you, and you will understand it more. So for those who have their pen and their Bible, use them and their paper, use them and write down this question from here to here and to here, because the next action now is for us to delve into solving the question. So you can see the group structure here that white invested in red directly with 10 million naira and bought 4 million shares. And then white also has interest in red from the investment of blue, its subsidiary in red. Blue invested how much? 10,600,000 in red by acquiring 4,800 shares in red. So white is the parent of blue and red. Therefore, they form a group. Now, if you look at it very well, when we are going to calculate the percentage shareholding, you see that it is the combination of the two shares two companies shares that confer control on white, and he became the owner of the group. Okay, so I'm sure you would have written the question down. So I need to proceed to the next page. That will be the solution page. Okay, if you look at it, like I told you, this is what is expected of you. The other ones, you are going to do them in workings. So this is the solution to the question. But I'm going to skip this now and look at the way we arrived at the goodwill, at the retained earnings, and then the non-controlling interest. The goodwill, the retained earnings, and the non-controlling interest. So you see work 1, work 2, work 3. But first and foremost, let's look at the group structure. Let's look at the group structure. I don't know. I hope you guys are hearing me. Hope I am audible. You can hear, right? John, can you hear me? Or you have left? John, up to now, it's only 32 members of your class that are watching. And these, all the 32 are not all members of your class. So I see people from outside that are watching. Tell your classmates that they should watch, they should join the class. Okay? Okay, so let's look at the group structure. We have equity acquired and total equity. Okay, so white in blue, white acquired 12 million shares. Of course, the shares are 1 naira, so 12 million naira, 12 million naira, 12 million shares are the same. While the total equity of blue is 20 million. Let's go back to the question. The total equity of blue is 20 million. We go back. That's sorry, total issued capital is 20 million for blue, and white acquired 12 million. So the percentage holding of white in blue is 60%. That is 12 divided by 20 times 100 will give you 60%. And then white acquired red direct, acquired 4 million shares in red. Meanwhile, red has 16 million shares total. So what it means that he has acquired 25% of red. That is 4 million divided by 16 million times 100 gives you 25%. Then blue in red. Blue now acquired red. Blue bought 4.8 million shares in red that has 16 million shares. What it means that blue has 30% of red shares. Now, if you look at it, both white and blue independently do not have control over red. But when they combine their shares together, they have 55%, which means they have control over red. What it means is that when white uses his 25% to vote and directs blue to use his 30% to vote, what it means that the two companies will pool 55% votes. Then automatically they control red. So in that case, red is a sub-subsidiary of white. by virtue of being of the shares that both white and blue held in red. Now we have the effective interest. The effective interest. If you look at okay, let's look at white share of blue in red is 2880. So why is it 2880? You know that white has 60% of blue. So this is blue in red. If you take 60% of blue here, it will give you 2880. 60% of blue, that is 4.8 million times 60% will give you 2880. Plus the 4 million of white in red gives you 6880 million. And if you do this over this 6880 divided by this times 100, you have 43%. Or you can also do 18 you can also do 18 plus 25 will give you 43%. Or you can do 60 times 30 plus 25. So these are the various ways you can get this thing. So let's pause and use your calculator and try all these things I've told you, whether you can arrive at it. 60% times 30% equal to 18 plus 25. You have 43%. You can also do directly. You can also do directly 25 plus 18 will give you 43. Or you can do 6880 divided by 16 will still give you 43. So these are various ways that you can arrive at the effective interest. So please take good note of it. Okay, take good note of it so that you know how it comes. Can you still see my? Are you on? Okay, what's the discussion? You are not okay. It's not here. Are you sure it's not your phone? Is it that you are not hearing well? Okay, John, can you hear me? Is there anybody having any other person having that problem? Maybe it could be your phone. Eh? It's still working. Okay. Okay, so we'll go on. Now we have calculated the effective interest of white in red. I've also calculated the effective interest of white in blue. So we can go on. So the next thing now is for us to calculate the non-controlling interest. Sorry, it's because of space. I have to bring the non-controlling interest down. Okay, let me restore my video. Okay, now it's not covering anything, so I can restore my video. Okay, so because of space, I have to move the goodwill up and bring down the non-controlling interest, but I calculated the non-controlling interest as 1. So in blue, the non-controlling interest that we have in blue is 40% of the 60 million. Let's look at where the 60 million is coming from. That's the equity, 60 million. Can you see it? 60 million is the equity. And the non-controlling interest is 40%. Then remember I told you that the investment of blue in red will not be used to calculate the non-controlling interest, because that is what blue used to invest in red. So it will be removed from the net asset of blue, like we did when we are solving the other one. So this will not be used to calculate. So you remove this and then take 40%. You have 19,760. That is the non-controlling interest in blue. Then the non-controlling interest in red will be, this is the equity of red. And then the effective interest is 43. 100 minus 43, you have 57. So the non-controlling interest is 57%. So it will be 57%, 44 million times 57%. So you have 25 million 80,000 naira. So the total non-controlling interest is 44,840. 44,840. I hope you understood how we got this. If you don't understand, please ask, let me know. Okay. Okay. You want to know how I got the effective interest rate? I gave you 3 different ways, but I will still go back again so that you'll understand. Now, what I said is that the effective interest rate is 60 times 30 plus 25. 60 times 30 is the indirect holding that white has in red. 60 times 30% is the indirect holding that white has in red, which will give you 18%. Then you add the direct holding. Let me show you the structure again. Look at it. This is the indirect holding, 80 times 45%, then plus the direct holding. That is exactly what is happening in the other side. If I knew, I would have drawn the same structure like this so that you understand. So that's how we got the 43%. 25 plus 18 gives you 43%. And this 18 is gotten by 60% of the white holding in blue times 30% of blue holding in red. Because this 30% that blue has in red, white has 60% of this 30%. So it will be 60 times 30, that will give you 18%. That is what the indirect holding of white in red is, 18%. And then if you now add the direct holding, you will now have 25 plus 18, which will give you 43%. So I don't know whether you've understood now how we got the 43%. Do you understand now? Okay, the person who asked the question, do you understand? Faith, Baridon, do you understand how we got the 43%? Or you are no longer following? Faith, are you following? Okay, so the next thing now is the goodwill. Let's look at the computation of the goodwill. goodwill on consolidation. So we have white in blue, white in red, and blue in red. Like I told you, that we are going to do a two-step calculation. First and foremost, you will calculate the goodwill that arose when white bought blue. The goodwill that arose when white bought red, and the goodwill that arose when blue bought red. Then after that, you now look for calculate the attributable goodwill to red, the one that relates only to white. So it's going to be two steps. So let's go. Cost of investment in blue. White paid 25,200,000. That's what white paid to invest in blue. Then white paid 10 million to invest in red. White paid 10 million to invest in red, while blue paid 10 million to invest in red. Blue paid 10,600,000 to invest in red. I can go back to the question so that you see it. That's the question. This is what white paid. Investment in blue, white paid 25,200,000. Then white again, investment in red, white paid 10 million to invest in red. Then blue paid 10,600,000 to invest in red. So this is the investment. White paid 25,200,000 to invest in blue. White again paid 10 million to invest in red. And then blue paid 10,600,000 to invest in red. So I think you have seen that one. Okay. Let me check if there is any question. Okay. At EB, thank you. Thank you for the super chat. Okay, so let's go on. So we've seen what they bought. Now, remember that goodwill is purchase consideration less acquired net asset or net asset acquired. So we have seen purchase consideration or cost of investment as the case may be. So let's look at net assets at acquisition. These are net assets at acquisition. Issued capital is 20,000 for white, and then at the time white was acquired, it was, sorry, for blue, at the time blue was acquired. At the time red was acquired by, it was 16,000, 16,000. So that was the issued capital. You can see it in the question, 20 and 16, 20 and 16. The question said that they did not issue any share again. It's right from 1119, so it remains what it is. So blue issued capital was 20,000 and red was 16,000. I'm sure you've seen that. So this is red, this is red. So take note that red is appearing twice, the direct investment and the indirect investment. White in red, direct. Blue in red, direct. But later we'll calculate the indirect investment. So 16 million, 16 million is there. Now, share premium, 10 million, 8 million, 8 million. Let's look at the share premium there. This is share premium, 8 million, 10 million, 8 million. So you can see it. That's what is represented here. Share premium, 10 million, 8 million, 8 million. Red is appearing twice because of the direct and indirect holdings. Then retained earnings. Now, if you go to the statement of financial position, you see that the retained earnings of blue is 30,000 and red is 30,000. But that's not what we're going to use. What we'll use is the retained earning at the date of acquisition. So the date that White acquired Blue, the retained earning was 10 million. The day that White acquired Red or acquired shares in Red, the retained earning was 12 million. And the date that Blue acquired shares in Red, the retained earning was 8 million. So these are what we're going to use. So that's why you see 10 million, 12 million, and 8 million. I hope you understood where we took those things from. Okay, what's the question? Say there is a question. Let me know the question. I don't get the part where you said 60 times 30 gives us the 18%. Okay, you do 60% times 30%. What do you get? 60%, that is 0.6. 0.6 times 0.3 is 18% now. Is it not true? Okay. It's not 80, it's 30. 60 times 30. 60 times 30. Kabari Benson, thank you very much. That's it. So if you do 0.6.3, this is 60%, this is 60%. That's why she's dividing it by 100. Okay? So if you do 0.6.3 times 100, you get 18%. So if you do 60 times 30, like she did, divided by 100, gives you 18%. So I'm sure you understand now. I'm sure you understand now. Give me a yes if you understand. I want to have a yes if you understand. I don't want to move without confirming that you understand what we're doing. It's very, very important. Okay. So should I write down? Kabari, thank you very much for coming in to assist in that place. Okay, so we go back again to where we were before my attention was called. Except the question is not yet clear. Let me know. Is the question okay now? Okay. I'm going to set a goal. I'll set a goal. Let me set the goal first because it's like the super chat are not going. Let me set the goal first. I'll set if I get 10 super chats today at 1,000 per super chat in 30 minutes time, I will do a giveaway of 5,000 in class on Wednesday, on Tuesday. We will decide the modality in the class. I don't know whether you understand what I'm saying. I'm setting the goal. Okay. So it's left for you guys to meet the goal or not. Okay. No, I hope everybody is following now. Is it sounding now? It's not sounding? Okay, it's an old comment. Yeah, at Prince K. It's sounding. Oh, thank you. Okay, so let's go on. Let's go on. Nobody has called me back, so I'm going to run. So the total assets for blue as at the date of acquisition was 40 million. The total asset of red as at the day white invested in red was 36 million. And then the total asset of red as at the day blue invested in red was 32 million. So we now look at investors' share of this amount. This was 16%. 16% of 60% of this will give you 24,000. Please, somebody should look at it and say whether it's correct. 60% of 40 million. 60, 40 million times 60% equal to 24 million. Right? Okay. At I Daniel. Thank you. Okay. I hope we will be able to meet this goal before the class is over. Your attendance have dropped to 21. Celebrity basis. Can you take the attendance so that we know what we're doing? Okay. It's 19 now. It's going up and down. People are going up, they are coming in and going out. They should stay in the class so that they understand what I'm saying. The class will soon end, so don't run away. Okay, investor share. So we said this. Then, sorry, this 9 million should be here. Sorry. Let me see if I can correct it. If I can correct it, fine. Let me see. Yeah. Yeah. I think it's done. I just pray it reflects. Yeah, it has come. So this is where it's supposed to be. So here, white and red was 25%. And 25% of 36 gives you 9,000. Can somebody do it and let's see? 25% times 36. Yeah, gives you 9 million. Then here was how many percent? 30%. 30%. So I will give you 30% times 3200 gives you 9.6. 9.6. So that's why you have investor shares in blue is 24 million, investor shares in red is 9 million, and investor shares in red again is 9.6 million. Any questions so far? Okay, any questions so far? I want to know so that we can handle them. I'm sure you know how we got the investor shares, right? Wise, finally, you've joined the class. Wow. I've not seen you in school since school started. Okay, oh, thank you. It's a limited basis. I know you are John David. You don't need to bother yourself. Okay, so let me continue. Now, the goodwill will be cost of investment or purchase consideration minus net asset acquired. So we have seen net asset acquired here. That is 24 million minus the purchase consideration. We have 1.2 million. Then here, purchase consideration here is 10 million minus net asset acquired, 9 million to have 1 million. Then here, purchase consideration is 10.6 million minus net asset acquired, 9.6 million. You have 1 million. So this is goodwill for acquiring the shares in the subsidiaries. This is what goodwill for acquiring blue, for white acquiring blue gives him. This is the goodwill that white paid for investing in red. And then this is the goodwill that blue paid for investing in red. The next step now is to calculate the amount that is relating to white, goodwill attributable to white. So in this place, we know that this is 60% holding. This goodwill arose as a result of the 60% holding. So all of them is related to white. So it will not be divided, it will not be split. Here, this goodwill also is a direct goodwill that came from white investing in red. So the goodwill relates 100% to white. But in this place, this goodwill that arose here is as a result of blue investing in red. And this 1 million, white has only 60% of it. Only 60% of it. So if you calculate 60% of this, you have 600,000. So these are the effective goodwill. So the total goodwill on consolidation will be 1.2 plus 1 million plus 600,000. This will give you 2.8 million. So I say all figures in thousands of naira. So you can now see we have calculated the non-controlling interest, we have calculated the goodwill. The next thing now is the retained earnings. So before I go to the slide for the retained earning, I want to pause to see whether there is any question that you have. Any questions so far? Okay, Oliver Precious, can you ask your question? You have moved to 41. Thank God. Oliver Precious, you said you have a question. Can you ask the question? Or I'll assume that there is no question. Or is it that you guys don't know how to express your question? Eh? I'm sure there are some people that are confused. So you should ask question. Okay? Ask question. Let me know. Even if it is I don't understand, you can say, let me get a feedback. Because I am moving to computation of written earnings. So let's go to written earnings. Consolidated written earnings. Sorry, this one is supposed to be here. Let me see if I can correct it so that there will be no confusion. Okay. Okay. I think it's corrected now. Let's go back. Yeah, it's corrected. Thank you. So we have written earnings of white. This is 100% of white written earnings. Let's go back to the statement of financial position. White written earning is 35 million. So we took all of them, 35 million. Then share or post acquisition written earnings of the following companies. Listen, it is the post acquisition written earnings that we're going to calculate. Remember our pre-acquisition written earnings and post-acquisition written earnings. So what we are going to calculate is the post-acquisition retained earnings. So Blue had written earnings of 30 million. Then as at the date of purchase, the written earning was 10 million. So you have to remove that 10 million, which is pre-acquisition written earnings, from the current written earnings, the current statement of financial position written earnings, and then apply the 60% holding of white in blue, the 60% holding of white in blue to the post-acquisition written earnings. 30 million minus 10 million is post-acquisition written earnings. The written earnings in the book is 30 million. At the date the company was acquired, they had 10 million. So out of that 30 million, remember I said current statement of financial position written earnings is equal to pre-acquisition written earnings minus post-acquisition written earnings. Sorry, it's equal to post-acquisition, pre-acquisition written earnings plus post-acquisition written earnings. Let me repeat again. The current written earnings in the financial position is equal to pre-acquisition written earnings plus post-acquisition written earnings. Therefore, post-acquisition written earnings is equal to retained earnings minus pre-acquisition written earnings. So this is retained earnings minus pre-acquisition written earnings, which will give you 20 million. Then out of that 20 million, 40% of it relates to non-controlling interest, while 60% relate to the owners of the parent. So you are going to use only those ones that belong to the owners of the parent. Remember that the one that did not belong to the owner of the parent has been considered as non-controlling interest. The one that does not belong to the owners of the parent has been considered as non-controlling interest. Let's go back and look at where we calculated the non-controlling interest. You see that 60 million, we've used 40 million to calculate non-controlling interest. Okay, so that's it. Then we look at red, share or post acquisition written earnings of red. Direct investment. The direct investment is 25 million. And then the retained earnings of red is 20 million minus the pre-acquisition retained earnings of 12 million times the 25%. You have 2 million. This is the retained earnings of red. Let's go back to the statement of financial position. Retained earning of red is 20 million. But at the date of direct acquisition, there was 12 million. So 20 million minus 12 million is the post-acquisition retained earnings. So multiply it by the 25% interest of blue in red, you have 2 million. Then we look at another one, another retained earnings coming from red, but from that indirect acquisition, from that indirect acquisition. So now we are using the 18% here. Let's go back to where we calculated this. It is this 18% that we are using, not 43%. We are using white share or blue in red. White share or blue in red. That's what we used. So 20 minus 8. 20 minus 8 times 0.18 give you 2,160,000 naira. So you have a total of 51 naira, 51,160,000 naira. So that is the retained earnings. We have calculated the retained earnings. We've calculated the goodwill, which is here, and then the non-controlling interest. So all we need to do is to go and plug it in the system, eliminate the ones we are going to eliminate, and then add the ones we are going to add. We're going to add goodwill, we're going to add non-controlling interest, and then the reworked retained earnings. So once we have done this, our account will balance. So let's go back to the account. Solution: White Group consolidated statement of financial position as at 31st December 2021. It is important for you to title your account, because most of the times people don't put this title, you just start solving. Ordinarily, you are supposed to score 0. Even though we close our eyes and mark it, you are supposed to score 0, because nobody knows what you are doing. So white group, look at the way it is written. White group consolidated statement of financial position as at 31st December 2021. So we look at assets. Goodwill on consolidation, that is workings number 2. We had 2.8 million. Property, plant, and equipment, of course, is the total. The total property, plant, and this plus this plus this gives you 156,200. Current asset is also the total. 24 plus 21 plus 15 gives you 60. Gives you 60. Then total asset 219. We go to equities and liabilities. So issued capital, white only. We're only going to take the parents, 30 million. This one has been eliminated. This one has been eliminated. So we will not bring them in. Sorry. That's 20 million. Sorry, 30 million. Then share premium account, white only. That one again is white only, because all these ones have been used to derive the goodwill. They've been used to derive the goodwill. They have been bought over. They are not distributable to third parties, to owners of parents, even though they are given to parents, but they cannot give them to owners of parents. Therefore, they will be eliminated. 1, 2, 3, 4. Now let's go to the written earnings. Retained earnings, we calculated it here to be 51160. So we bring it down here, 51160. You already know how we calculated it. So this is the total. Then you bring in non-controlling interest, 44,840. We calculated it here too. Non-controlling interest, 44,840. That's it. So we add the loans, we add the current liabilities, and when we add up, the account has balance. So you see how it went. That is what is called mixed group. Oh, it's coming. I have at celebrity. That's John David at blessing at blessing Donubari. Yeah, thank you. We have not beaten the, let me see. Oh, Kemi, why did you go below the goal thing so that we beat the goal? Eh? Shouldn't have gone below the goal. Let's see what the goal. Only 4. What's happening? 4 out of the 10. We will not do the giveaway. Oh. If you don't get this thing, the giveaway will not come. So it's time for, okay. So let's ask question now. Okay. Let me see. I didn't see all these ones that were coming. This is the first person. Prince K, I've seen you. Daniel, I've seen you. Seen Daniel. Asita. Oh. Asita at Asita. Asita Prosper. Friend, give me way. Okay, at Asita. No, that's not cool. Okay, I'm going down. Okay, with this, we have at Kabari Benson, at Oye Brad Dixon. I want to thank you guys for all that you are doing. Okay, at DT, yeah, at G, yeah, Karen, my friend, at Celebrity, at letting thank you. Yeah. So any questions so far? Any question? Okay, so let's take a review and then we'll call it a day. I said group account, consolidated statement of financial position, mixed groups. A mixed group is one in which a parent has both a direct and indirect investment in a particular subsidiary. In such situations, both the non-controlling interest and the goodwill must be worked out in two stages. So that's what we have done. Now I give you example of a group structure of mixed group. We have parent holding a percentage, a controlling percentage on the subsidiary, and the subsidiary holding a percentage, even though it's not controlling percentage. But because parent has a direct interest in the subsidiary, if you add the interest of the parent and that of the subsidiary, you see that they have over 50% holdings on the sub-subsidiary. Therefore, it becomes, the parent becomes the parent of the sub-subsidiary and the subsidiary. Now, this is the holding structure. P in S, 80% direct holding. P in SS, 15% direct holding. S in S, 45% direct holding. Then P in SS, indirect holding plus direct holding, 51%, which is calculated as 80 times 45 plus 15 to get the 51%. So from there, we did this example, white, blue, and red. This is the statement of financial position, and this is the situation of every company when they were bought, or the status. I think that's the best language. This is the position of the companies at the time the shares they were acquired or shares were acquired in those companies. And these are the dates that they acquired them. So you now see that white bought blue in 2019. So what it means is that anything that blue does after 2019, white must have a cut. Anything that blue does after 2019, white must have a hand or interest. That's why when blue acquired red in 2020, red immediately became a sub-subsidiary of white. Okay, so this is the question. And then we started by calculating the percentage holdings. We saw that white in blue, because they acquired 12 million shares when blue has 20 million shares. It was 60%. That is 12 divided by 20 is 60%. White in red, white acquired 4 million shares when red had 60 million shares. So we have 25%. Blue in red, blue acquired 4.8 million shares when total share of red was 60 million, so they acquired 30%. Now, to calculate the effective interest of white in red, we do 60 times 30, that is 60% of 30 plus 25% direct holding will give you 43%. Or we do it this way, since white has 60% of red, what it means is that these 4.8 million shares that white bought, that blue bought in red, white has 60% of it, which will give you 2.88 million. And then if you add this to the 4 million of white in red, white now has both direct and indirect share of 6.8 million, which will give you the effective interest of 43 million. Then we come to calculate the non-controlling interest. We said in blue, non-controlling interest in blue is the non-controlling interest of white in blue, which is 40% of this 60 million minus the investment. This is the net asset of blue minus the investment that blue did in red. So you have this. Then red net asset times the non-controlling interest. Remember that the controlling interest is 43%. Then the non-controlling interest 100 minus 43% gives you 57% times the net asset of red gives you 25,080, which will give you at the end 44,840. Then the calculation of the goodwill. This is investment of white in blue, investment of white in red direct, and investment of blue in red direct. Then these are the assets, the net assets as at the date of acquisition. And then we calculated the goodwill belonging to each of the acquiring company. Then we want to attribute or relate the goodwill to white. This one relate 100% to white. This one relate 100% to white. Why this one relate only 60% to white? So that is why we got 60% of it. So you add it up, you have this as goodwill. And then, as I've already explained, this non-controlling interest. So we consolidate to get this. So you can see how group mixed group consolidation. Okay, it's mute. Can you guys hear me now? Can you hear? My mic went dead. Can you hear now? Okay, I'm going to put the echo mic. Where is